Good evening and welcome to Technique Trading Solutions Weekly Market Update. Today's date is Sunday, September 14th, 2008. We're going to begin this update by reviewing the sub-index setups we had previously given, several stocks from previous forecasts, an ETF, and then a quick review of what we can expect from the S&P 500 this week. Last week we had recommended just exiting the positions that we had initiated on the non-life insurance index. We didn't see it drop like other sectors and industries were, so that was a pretty bullish signal, and depending on your risk level you might still be interested in holding something like that. I wasn't, so it's really up to you. What we saw this next week was the sector continued to decline and to hit an original target that we had forecasted of 253. Now a similar scenario enrolled on the Dow Jones US wireless communications sector. We had sent out an alert to short these companies within this sector following this 240.55 high. So all throughout this area you were able to do that. Now we'd recommended covering your position here at the 216 target. You also would have had an option not to cover it, but also to hold for the 201 low. So that this next week we did see the wireless communication sector drop down to our originally 16% target. We were off by about 1 percentage point on the decline. Next up is potash. Now this trade's been moving along for quite a while now. We had forecasted a final decline down to 136.78 was our original price on there. And the final low actually came at 137.07. So we were off by less than 0.2% for this move on calling the bottom on a 22% move, so which was pretty good. This next week we're looking to take this up quite easily to around 173, and then following that there should probably be a pullback, probably another high coming in just around the $200 mark. You know, it's really up to you whether or not you'd be interested in holding this for a new high back above 240. If you're a real risk taker, then by all means you can choose to do that. So I mean, that trade worked out also really well. Sunoco is next. SUN. With Sunoco, we had recommended there was two possible entries, the 40.37 and the 38.28. We never saw our 38.28 buy target get hit. There was sufficient support in the $40 region. So this week forecasted a $7 rally up to $47.35, and that rally did occur. This is also kind of interesting because we saw on MSNBC's Fast Money, Joe Terranova recommended buying this stock after this huge rally day. So he actually made it on the week's pops and drops. So it's featured on there, which was really good. He says also there's more upside potential. That's what we saw. But just remember that you heard it here first at Technique Trading Solutions. Next up is China Mobile. We had two possible entry targets. If the first one of 51.71 got broken, our second target was 48.11 as our final support point. But now good news is that those who did initiate a long position on this stock, you had a chance to do it Thursday or Friday at the $48.11 mark. And what you saw was a 3.6% rally into the close for the week. And the low came in at 47.76 when we recommended to buy at 48.11. Now also this weekend, you saw Saturday, the Associated Press released some data regarding China changing its Telecommunications Act. So I think that this story could end up giving a real boost to the technicals that we have set up here. So ideally we want to see the stock open up $1.50 higher at least, or rally. We want to see a $1.50 movement up before falling back below $49 in the stock to confirm that the trend is up now. Next is IYZ. With IYZ, it was an ETF, and this was your alternative to playing China Mobile. What we see here is we were looking at 11.8% rally, which I guess it takes quite a while to be able to happen on an ETF. So we didn't see too much of a movement last week. It actually dropped by 30 cents or 1.24%. So again, with this scenario, you have an option to have a sell stop below 22.32 or 21.57 for this trade setup to be good. Next up is the XLF. Now the XLF, our previous week, we had forecasted a minimum rally of $2.59 or 11.9%. Now the actual rally came in at $1.76 or 8.1%. So we were off by a couple percentage points on that. Most notably, what we noticed was a break above its previous highs. Now it opened above there, but the same day when the break occurred, the close was below that breaking point, which is not bullish at all. And this served as a confirmation the 1266 resistance point on the S&P was going to hold when you have a daily close below the open on a breakout day. So that's not a very bullish sign at all. Next up is DTSI. We'd originally forecasted a decline of $3.76, and our actual decline came in at $3.58. Now last week we told you did have an option of covering your short. It might snap back a little bit too, and this approached really close to our target. We were looking at the cover at around 28.41. The low came in at 28.59. Pretty close. But now this next week, again, you have the option of being able to hold it for the new low for another one around 24.55. The only way to accurately trade this is not to have a cover stop at around $31 because they'll try and short squeeze you. The only way to really play it at this point is to have one above $34. Now with international paper, we had forecasted a rally of $2.73. The stock was going to go up 9.59%, and the actual rally came in at $2.13, or 7.48%. Well, the movement this week was a bit short of our target. We were looking to possibly get short of the 31.20 mark. Our second target, if that were to break, would be 32.67. So we have the next week to be able to see if the stock can climb that high before we can initiate these sell positions. So we will keep you informed of that also intraday if the alert comes up. And finally is the S&P 500. Now with the S&P, what you'll notice is the 1266 resistance, the test of it that we had forecasted for the previous week, it ended up happening and the resistance was met, which is too bad. We were hoping for a short squeeze there, but it's not a problem because we'd anticipated a low coming in around 1211. Now what we've noticed is the options market has priced in a rally up to around 1,293. And it should probably hit that this week if we take a run out and break 1266 again. Now our model has priced in a rally of around 44 to 58 points, so that fits in with what we're seeing in the derivatives market right now. Well, I just want to thank you all for checking out the website. There were no new stock updates this week, but we will have some next week. Just remember that at the end of the day, it's really the techniques that you use to trade. That's the deciding factor of whether you get to keep your money or just give it away to someone else. Thanks.